For this session, we would like to welcome Vikas Kataria and Kumudha Ganesan. Vikas is a non-functional testing lead for a British financial service company. Kumudha is part of a non-functional testing COE in Cognizant, UK. Vikas and Kumudha would be speaking on Black Swan events versus online trading. Watch their video interview. You can check out the link provided on the screen. Now, I would like to request Vikas and Kumudha to share their screen and get started with the session. Thank you.
Thank you very much, Varshita. Kumudha, do you want to share the screen, please?
Yeah, I'm just sharing, Vikas. So is it visible?
Yes, I can see.
Yeah.
Yes, it's visible.
Okay. Thank you very much. So, hello everyone. Thank you very much for attending this meeting. I have with me Kumudha Ganesan, who is my friend and teammate, and we both will be presenting our paper Black Swan Events versus Online Trading. Kumudha, next one, please. Thank you. So in this paper, we'll discuss about below points in detail, like impact of Black Swan events and on trading systems, key factors that cause outages in trading system, performance testing strategy capable of dealing with Black Swan events, identify potential bottlenecks in trading components, and other performance engineering activities that we can do to make the trading systems efficient. Now we'll discuss what is a Black Swan event. Now, a Black Swan event is a very common term in financial world, but what does it mean? So if I say a swan, if I say the word swan, then what color comes to your mind? Obviously white, right? Because most swans are white, but why they do call it a Black Swan event? Now, well, the story goes that people used to think that Black Swan don't exist. But one was found one day, and then whole thinking changed. So, and later on, they found that there are not one, in fact, so many of them. So the lesson we can learn from the Black Swan is that what we think is very rare and won't happen, may happen in future, and the probability of happening that is much higher than what we think or believe. You see, if also, no one can prevent Black Swan events. You see, Black Swan events from happening. If they are supposed to happen, they will happen sooner or later. Yeah. So one of the example of Black Swan event is the .com bubble. So in the late 90s and early 2000, right? There were internet was getting really popular, and in Silicon Valley, people were making all sort of websites. And this was a period of massive growth for website, online web portals, and all. People were using it, people were making it, and investors, they were also putting a lot of money in these websites. So as a result, you see, the market was booming, and the share price of these companies was also very high. So between 1995 and its peak in 2000, right, the Nasdaq's composite stock market index rose about 400%, and then only to fall 78% from its peak in the year 2002. So yeah. And during the .com crash, you see, many online shopping companies like Pet.com, Web1, Boo.com, and several telecommunications companies like WorldCom, North Point Communication, Global Crossing, they failed and shut down. You see, and some of the companies who survived, like Amazon, they also lost a huge chunk of their market capitalization. And for example, Cisco lost 80% of its stock value. You see, so yeah, it was very bad for the bubble burst, and it was very bad for the trading market basically. Now, during the .com crash, you see, what happened that now people are losing money. So after that, it affected not just their company, in fact, the whole economy. And that's why it is considered a Black Swan event. Now, we know that we are also going through one of the pandemic right now, you see. So the pandemic is not over, even though like we are not, you see, talking too much about it, or we are not bothering too much about it. We have fed up. So, but yeah, so let's understand with the example of COVID-19, how does these Black Swan event affect trading platform? So during this pandemic, we know that there were lockdowns all over the world, you see, and business were shutting down, people were losing their jobs, and they were struggling, right? So at that time we cannot expect them to invest and put their money. So whatever savings they had, they were just surviving on that. So at that time the use of online trading system was very low, and it resulted in uh, loss of profit for many of these teams. So it affected them. Now what happened when in 2020 there is a big pharmaceutical company, they announced a vaccine, okay, that we are in advanced stage of developing a vaccine. Now this gave people hope, and so as a result of that, people thought, okay, now things will improve, probably we have something with which we can deal with this pandemic, right? So it gave them hope, and with that they started investing, because there was still lockdown, you see, people cannot still go out and work. So whatever money they had, they started investing with that. And at that time, you see, there was a huge growth in the number of online users on these online trading platforms. Now GMP Securities estimated that there was a increase of about 10 million new online user account in 2020 only, right? Now with this huge increase in the demand, or these online users, increase in online users for this trading platform, these trading companies were not uh, ready, you see, they were not ready to deal with such kind of demand. And obviously which resulted in, when all of them were logging in, many of their trading platform collapsed, or there were many outages, right? So in the next slide, in the next topic, basically we'll discuss about what are some of the key factors that could lead to trading outages. Now, as I said, that during this pandemic, and more people were using this website. Now, when people use this trading websites, right? So what are the things they do? So they use these websites or apps to track the live prices of the stocks and share in which they want to invest. You see, they want to see market news about the stocks, funds, and other important things that, in or you see, in which they want to invest. They want to buy stocks, they want to sell stocks, share, or any other financial instrument, right? Or they simply just buy and hold them, and they just keep on seeing, okay, how much money I have made or how much money I have lost, right? So, and now with advances in technology, right? Now we have something called bot trading, right? So in which we just set up a trading bot, and that bot does all the trading for us. Now these bots are really fast, and they can perform thousands of transactions in an hour, right? Which puts a lot of load on the system. Now dealing with such kind of load is a challenge for these trading platforms. Now, and I've already said that these trading companies were not able to deal with this change. Now, what is the impact? So when these trading outages happen, so what happens at that time? Obviously, I said that people are not able to make trades, and always when there is outage, people won't be able to make this trade. And what happens, so whenever we have this outage, or suppose as a trader I'm not able to, so what I would mostly do nowadays is that in the world of social media, right, I will go on Twitter and tweet about it, that I'm client of this company, I'm using this broker, and the website is down, right? So all this results in, you can say, the loss of reputation. And nowadays, like, because there are so many options, there's different platform, different clients, so uh, people won't think twice before, you see, switching. Okay, if this portal is not working, or this trading platform is not working for me, I can go and join another one, right? So with this, so they lose reputation, they lose client, and obviously with that they lose revenue. And also, like, it's not just when a something big happens, like platform is completely down, users are struggling. You see, they are making a lot of noise online and through other forums. There are various regulatory bodies in all countries, right? So they also take note of that, and with that they can give them severe warnings, or they can even put hefty fines on these companies. So yeah, so not a fun fact. So what happened in 2020, right? So there was a 1 day outage in Tokyo Stock Exchange, and as a result of that, the CEO of the Tokyo Stock Exchange was forced to resign. So yeah, not these outages are not good. Yeah. So now we'll discuss about what are some of the challenges that we have when we performance test these trading system. So let's start with the requirement gathering itself. Now, these trading platforms, right? Nowadays, these trading platform cater to all sort of demands. So it's not that, for example, if you are in India or UK or any part, right, it's not that you can only buy or sell stocks or funds or any other financial instrument only in that country. You can trade in, you see, stocks and shares of other countries as well, right? Now, the way this architecture of this trading system is designed, they use different components to deal with different geography. Now, so for example, like I will be using a different component of my trading system when I'm say buying stocks in UK. I will be using a different trading trading component when I am buying stocks in say America or India, right? So now the obviously we have to define non-functional requirements on the system as a whole, but the extra challenge in here is that we have to define, like we have to go in the component level. We have to define, okay, what sort of requirement I have for UK market, for American market, for European market, or any other. So this defining component level NFR along with the whole system as a whole, and then you see making them in sync is a huge challenge. uh, Also, like as I said, these platforms allow users to serve in different, or to buy and sell stocks in different geography, right? So now we have like different all sort of users, you see. They have different they are trading in different geography, they have different portfolio size, they trade during different time of the day, uh, and they place different type of orders, right? So uh, becoming it gets very difficult to mimic the real time user behavior, okay, and come up with a effective and efficient workload model which simulates that user behavior. And this workload model is really very important in performance testing. So that's how we, you see, plan our scenarios and everything. So it's a challenge mimicking the real world behavior of users who are trading in different geographies. Also, most trading system, you see, so we have like all sort of trading. So there are new vendors, there are old platforms. So similarly, their trading platforms are also built. Some of them are using latest technology. They may be having some legacy applications. They may be having some in-house applications, and these applications, you see, they interact with a lot of third-party applications. And now all of these applications, like as I said, they use different technology, so they use different protocol to interact with each other. And with that, I mean, finding a scripting tool which can cater to all these different protocols and different technology, basically finding one tool fit for all is a big challenge. Similarly, when we start executing, right, so at that time, what we see now we call these trading platform as low latency and high concurrency applications. Now, so what that means is that the response of the application should be very fast, because the price of a stock changes very rapidly sometimes, right? Within second it will change, maybe in tens and hundreds of rupees or pounds or dollar, right? So the price of a stock changes very fast. So we should be able to place trade very quickly. And also the high concurrency, because there are thousands of traders at any given point of the day. So simulating this high number of users, or simulating high concurrency for an application is really very difficult. Also, like as I said, like many applications using these legacy applications, right? And these legacy applications are not able to connect with, say, these latest monitoring applications like App Dynamics or Dynatrace or any other music. So then when we are running a load test, so we know that the live monitoring of a test is really very important aspect of load testing. So and we use these monitoring tools like App Dynamics. So if the legacy application, your in-house applications are not able to connect with these uh, monitoring tools, then live monitoring becomes difficult, and as a result of that, the result analysis of the testing becomes very difficult. So these I have highlighted some of these challenges which are there for. Now Kumudha will take you through to further new topics. Kumudha, over to you, please.
Thanks, Vikas. So as Vikas highlighted some of the challenges that we see like when testing the trading platform. So I'm just going to walk through like what factors we can consider, how we can mitigate these challenges to build a robust and efficient strategy. If you see like other applications, like the load is going to grow very gradually over a period of time whenever the business is open. But it is not the case on trading application. If you look at the graph which I have shown on the right side, see the users will be having the devices in the hand and they are just waiting for the market to open just to see like what is the stock price, whether they can go and place an order. Within a fraction of a second, we can see like there is a huge kind of surge happening, going to happen in the system as soon as the market opens. So it is like the system is going to turn from a very cold to a very hot, and like within a few minutes when the market opens. If you see the graph, right, it is just spiking out and it is coming down, but even the load is not like very minimal. It is like it is going to have a very huge load throughout the period, but like the first few hours of the market house is very appreciate. So it is not just one day like in where other applications related to if there is any clearance or like any Black Friday sales, we can expect this behavior. But in trading system, this is going to happen on every single other day. So on top of it, if you see any Black Swan events, like if any geopolitical issues or any electric campaign that is going to affect the economic or like some stock values, we are going to see like in addition to it, a very high volume traffic is going to flow into the system. So it is going to hammer and then strain the system very badly. So what we can do is like while doing the performance testing for the trading application, we can consider few key factors that we can help us to build effective and the robust system. So for example, while defining the NFRs, we have to see like what are the past Black Swan events has happened in the past over the year, and analyze the production stats for those, and also see like how a normal peak traffic on the trading system looks like. Capture all the stats, do some analysis like what exactly how we can forecast this volumes based on the how we can predict what is the next unforeseen traffic that we can see in the system. And also like assess like what is a current bottleneck or hotspots in the system with all those other statistics, and conduct a relevant workshop with the relevant technical people to understand and get the feedback as well, to see like how what is the current status of the system. So one more thing is that in addition to the front end load, some backend process has to run in the backend to settle the trades that the users are putting into the system. So these processes are running on the legacy system. So it is not easy to capture the logs and what events is going on, what are the user journey, or like something is happening in the legacy system, it's going to be a black box. So we have to define some effective strategy over there to understand what are the backend processes are going through when during the market hours. So it is necessary to have a consolidated NFR, precise NFR defined for both front end and the backend process. And also like while designing the scenario, it is not just like you are just putting in like enough load into the system. If you prove the resiliency and scalability of the application, it is going to work for the Black Swan events or any other catastrophic events. It is like we have to consider a few things, like because we are going to mimic the real-time users in the scenario. Like when you use a trade, he will have like different kind of scenarios for him. Like we have to see like how the user profile looks like. So yeah, client portfolio mix plays a major role here. We have to do a deep dive analysis on the customer portfolio based on like the number of the accounts he is having, and how does the portfolio looks like. And then this is a multi-market platform, right? The same application the user can use, and he can trade using different currencies. He can buy the stocks in rupees, dollars, or euros, in pounds. So though the front end system looks same, the component involved in those currencies is going to be different. So some amount, I mean, we need to see, like, analyze those things, like what amount of trade, percentage of trade is going to a I mean, this multi-market components, and also like the channel they use, right? They use different channels to place the order. So we have to consider all those things. And also it is not like buying as a stock is just going to be a straightforward. So they are going to be different type of orders. For different type of orders, the order fulfillment happening in the back end going to be different. So we need to see like what kind of order on percentage ratio of the orders the users are putting into the system. So this things we have to consider while we are deriving the while we are doing the workload mix for the trading scenarios. And on top of it, we need your environment which should be like live, like, right? So unlike in other applications, if we have any third party system, we just go and mimic it with like service virtualization using HTTP, but this is trading, right? So it uses the different protocol to communicate with the third party, and a lot of third parties are involved because it helps to settle the trade at the end of the day. So the stub is not a straightforward here. Like we have to use a specially designed test interfaces which accepts the protocol, and there is a cost involved on top of it. In case of, for a few of the scenarios where we have where the third party involves in settling the trade, when we have to do the testing to prove the efficiency between those two systems, we have to get the third party support there. So it is going to be, so they are going to charge on a specific day. So it is like a cost is also involved. So we have to consider all the scenarios when we are building up the test environment for the testing. So it is on top of it, we have to see like if there is any profiles, right, in other retail applications or like other application, it's just going to be a straightforward one. But here, right, we have to come up with different profiles. So what I mean, in market has, what if you see a catastrophic events, how we can do the workload profile. So we have like multiple profile with this same client portfolio mix. We have to do a lot of permutation combination scenario. We have to derive the scenarios, and we have to test with the on the system. So and that scripting also, right? So since it is multi protocols are involved, each component accepts a different protocol. So we have to do a comprehensive study to identify one tool which resolves the script, which help us to mimic the load, as well as, right, during our load execution, right, we are not going to hit with like 100 or 1000. Like we are going to, if you have seen the number, this is just one of ideal scenario. Like we can expect like 140K customers into the system. So the tool should be capable enough of simulating this much load into the system. So and it also be cost effective also. So these things we have to consider when we have defining the strategy and the scenario for it. And on top of it, we have to repeatedly run the test in the environment. So we have to build an effective test data strategy. So whenever we run the test, it is going to consume a lot of data in the environment. So it is not like clearing one particular queues or like table. We can go and run the second round of tests in the same environment. So we have to build an effective test data strategy. So how we can run multiple iterations on the same day without a minimal or few downtime in the environment. And so on top of this, like we have to see how I mean, if there is any what to say, like during the executions, right? Since there is on the legacy system, we don't have the monitoring built in the system because like they have very limited monitoring. We have to see if we can build any custom dashboards to capture those logs and we can see like from there we can do some analysis. So considerable amount of time should we have to invest on like an effective monitoring in place. Like if we are running the test and without monitoring, it was not going to give a value add to it. So these things we have to consider during our strategy creation. And also once we are doing the test, we have to find the details like which system is having hotspot here, and we have to collate the details and retune the system. And this exercise, right, it is not just you are setting it out and you're running the test throughout the year. It's just going to be, has to be revised very periodically and frequently throughout the year. So yeah, so this is the effective strategy that we can have for testing the trading systems. So I'm just moving on to the next slide. So this slide gives an overview of how trading architecture looks like. It's just like one of the typical architecture. So it may varies according to the client needs, customer organization requirements as well. So I will just give you a walkthrough like how a trading system works. So whenever the users access the application from different locations, so he uses a different devices, mobile, desktop, or laptop. So when the user accesses the application, the load goes via the load balancer, and it goes via the API gateway, and then the user authenticate himself on the authentication server, and there is a content management server which actually presents the application to the user in a very presentable format with the content and everything. So whenever the user wants to buy a order, he places a request to the trading system. What the broker does is, it gets the request from the user, and then it sends the messages in an electronic format to the retail service providers or the market data feeders, market makers. So actually what is this market feeders does is, this is a company which sells and buys the stocks, and they make a profit by making a difference in the offer and the bid price. So whenever a user is interested in buying one of a specific stocks, he sends a request to the trading broker. The broker in turn, it sends a request to a pool of retail service provider. So then it will get the request from those pool of retail service provider through the FIX, Financial Information Exchange Gateway. So what the broker does is, it will try to pick the best quote, best price for the user, and it will try to present it to the end user. So this happens in just fraction of seconds. So just imagine if there is a market opening out, and like 100,000 of users are coming and hitting into the system. So the broker has to send the messages to get the live price feeds of the stocks from the retail service provider, and how to give it back to the end user, and the end user has to see the price. If he is happy with it, if he decided to go for place an order, then he have to do in next few seconds. If you see any potential timeouts, if it is not able to fetch the code and display it to the customer, it is going to annoy the customer at that time. So yep, a considerable amount of work and then load is going there in it. And if there is any network latency, and if it is not able to cope up the traffic that we put, then it is going to spoil the reputation of that investment organization. And so whenever when happy with the code and he tries to place an order, the order will goes into the order management system. So as I told earlier, right, there are different kind of orders, like so based on the different kind of orders and different currencies, it will get fulfilled in the background by using the different components. So the components involved is different for different currencies. And as well as the portfolio management, so it manages the portfolio of the customers with like what stock he has bought, and all those trade details would be there in this. And whenever when the payment is, all the payment related thing are taken care by the payment authorization server, where it helps to capture those payments details and everything. So once the trade has been placed, it has to be successfully settled at the end of the day. So in the back end, some reporting process, settlement process runs, and it sends the settlement to the third party, and then from third party it sends it would send the report, transaction report, to the regulatory body. So this should happen within the defined time. In case if it doesn't happen, it's going to spoil the reputation of the organization. So this is this is just overall architecture, how a typical trading system looks like. So I'm just going to highlight like where we can see like
1 minute to go. So you guys need to wrap up if you can.
Yeah,
Okay?
sure. Yeah. So this is just architecture. I will just quickly give a highlight like where we can see a potential bottlenecks. So scalability of an APIs, we can see like it's going to be an issue. And then in the data queues, we can see like the network latency and message processing time. If the report is not able to send it to the regulatory body, there we are going to see a regulatory compliance. And the scalability of the trading system is going to a bottleneck if you're going to see a black swan events. And if the content management is not efficient, we are going to see increased response time, page load errors. And if the bad jobs is not going to run within the defined time, it is going to if it overruns, it is going to affect the business. So these are the potential bottlenecks that we can see in the architecture. I'm just quickly moving on to the next slide to see this. These are the tests whatever the high bottlenecks that I have highlighted in the previous slide, right? That we can cover by using component stress, scalability, endurance, and the volume test to discover this in the test environment, and we can tune the system in the before in the production. And this is just the roadmap for the future. So like these are the roadmap that we are proposing for the efficient build on trading system. Say for example, plan for shift right performance assurance, like where we can conduct the performance testing periodically in the production. This gives us some confidence, and we can validate our test results as well as the live results to see like if we are going on the right track. And we also see if any of the issues that we are slipped to notice in the test environment, we can find it in the production and fix it and tune it. So yeah, so I'd like to conclude like we cannot prevent the catastrophic events from happening, but we can definitely improve the efficiency of the trading system by following this performance testing engineering and the activities that we highlighted here. Thank you.
Thank you so much, Kumudha and Vikas. Guys, any questions?
I have a question. Kumudha and Vikas, which was the performance testing tool and a protocol that you had used for conducting performance testing of Black Swan events? Something from your experience that would really help. As you mentioned, there were diverse protocols, right?
Yeah, so it was a big exercise, like choosing the right tool. So we considered easy all industry standard tools like easy loader, JMeter, NeoLoad, and all this stuff. But we kind of shortlisted NeoLoad. The reason was that the amount, the type of traffic that we were dealing with. You see, we just talked about that. We nowadays these online trading platforms are like multi-channel, right? So you can buy trades, and so in all over the world. So we wanted to simulate traffic from all over the world. So we needed a tool which is which give us, you see, this cloud facility, so that we could do. So this NeoLoad has this cloud, so you can use load generators from cloud, and you can simulate traffic from different geographies. Also, we have like so many legacy applications and in-house applications. So for that, we could see that the normal protocols which are there in loader and JMeter, they could not support. So again, NeoLoad gave us that flexibility. So and even the normal default version, you see, the standard version of NeoLoad don't give us. So we have to include so many plugins and all, and then only we were able to record the scripts for those legacy and in-house application. So there also, plus the number of users that we were simulating. So we were simulating really very high number of users, and we found that the number of LGs needed, and the type of LGs, you see, the number of LGs, the power of LGs, and everything. So for that also we found that okay, NeoLoad is better. Also, because of these internal applications, right? Legacy and other, we could not use only cloud LGs. We had to use some internal LGs as well, and so there also we could see that we could run a test with cloud LGs as well as internal LGs together in one test. So there also we got this flexibility. So yeah, and again, budget is always there. So it was cheaper than say load runner.
Great, thank you. And what on the APM side? Which tool that we utilized that worked for this particular landscape?
So generally, we have a bunch of tools, right? But we again, because of these legacy applications, we are using so many in-house monitoring tools. We use we have built so many dashboard just by collating the logs. And if you ask about the industry standard this monitoring tool, then we are using App Dynamics.
Yeah, just to add, we are using App Dynamics, but we are not getting as much information from it as like there are like legacy applications, right? We have to build the custom dashboards on top of the logs written into those servers. So it's like it is not going to be a straightforward. So some amount of work has to there like to build those dashboards for the monitoring.
Thank you both for answering these questions.
All right, great. Thank you so much. T4 team, can you basically give the thank you slide? And I would request you to also show your quick video, everybody. And let's have a round of applause for Vikas and Kumudha.
Thank you.
Thank you very much.